Hello, everyone. Adam Bergman here, tax attorney and founder of IRA Financial, and gonna have a great video for you today. This is probably, I think, one of the most exciting tax strategies that I've encountered, and I think I'm really the first person to have identified this type of strategy involving IRAs, rollovers, and taking advantage of the 60-day IRA rollover window to actually use your property, whether it's for summer vacation, winter vacation, or the like. So the whole point of today's video is to take advantage of the 60-day IRA rollover rule and ultimately learn how we can benefit personally from an IRA-owned property. So what I want to do to start is ultimately I want to just go over what the rollover rules, how they work, and then talk about how they could be used to benefit ourselves personally. So when it comes to taking or doing a rollover, what's a rollover? When you move money between IRAs, generally it's tax free. Okay, so you can do a direct rollover or direct transfer between IRAs, and you can do that as many times as you want. Okay, and that is deemed a tax free transfer. If you move money from an IRA to a 401k, directly custodian, that is a direct rollover, and that can be done as many times as you want without tax. An indirect rollover is when you take access or you gain personal access to either the cash or the asset. And in those cases, you have 60 days to do whatever you want with the funds or the asset, and you have to return that asset you took or the cash within 60 days, tax free. So they're giving you about a 60-day window to have free reign over that asset or cash. The only caveat is it's 60 days. Okay. And the IRS is pretty strict on that 60-day. You can potentially get a waiver or self certify, but it's not easy. And it could be costly to get a private letter ruling. So if you are going to do the strategy that I'm about to discuss, you want to make sure that you are not violating the 60-day rule. And secondly, you can only do it once every 12 months. That's it, once every 12 months. Okay. And that's including all your IRAs. So if you have an IRA Financial, Fidelity, Schwab, you can only do this strategy once every 12 months with all your IRAs. Okay. You can't do it once for IRA one, second time for IRA two. It's once for all your IRAs over a 12 month period. And then thirdly, if you take cash out, you got to put cash back in. If you take an asset out like real estate, you got to put back the real estate. Okay, that's the only other thing to keep in mind. So, how does this work? What is the strategy? Okay, how did I figure this out? So, actually, personally, I was trying to figure out a way to say, hey, I got some money in my IRA. I've done some pretty good investments. I've diversified. I was up on cryptos now not so much, but I've had some really good luck with real estate. So there's a home I was looking at, a lake community that I thought it would be cool that we could use, my family, and we're only going to really want to use this property like 30 to 50 days, right? Like I can't take off. I can work from there, but my kids are busy. They can't just take out 3, 4 months a year and use this cabin or this home. But 30, 40, 50 days is totally a play. So I started talking to my wife and it's like, I have money in my IRA. I really think there's opportunities. I think I can get a deal on this home. Um, let's do it. And then we can rent it out 8, 9 months, 10 months a year, and then potentially we can use it. And then a light bulb went off. I was like, oh my God, the 60-day rollover. Oh my God, this is the plan. I was like, I just figured this out. I don't know why I never figured this out before. I've only written 8 books on self-directed retirement plans. Only been doing this 15 years. Like, how did I never think about this? This is crazy. So this is a strategy. Simple. You buy the asset in your IRA. You rent it out 10 months, Airbnb it, rent it out to multiple parties. And then for a 2-month period, whether it's in the summer to go use the lake or in the winter to be in Florida or Arizona for 2 months, or maybe 2 months skiing in the winter if you're in Colorado or Wyoming or Montana or California, like, hey, you can buy this property in your IRA. You can use it for up to 2 months every year. So let's say I do like July and August if I want to do like a lake cabin, or February and March for skiing, or maybe December, January, depending on where, or maybe it's in Sarasota and I just want to do January and February to get out of the cold. If I live, let's say, in Ohio or Michigan, and 2 months to use this property in the winter would be awesome. And then the rest of the year you can rent it out and get the cash flow. And I was like, I'm doing it. It makes perfect sense. Once every year I can do this. That's fine. I only want to use this property 2 months a year. It'd be perfect. If I want to stay there longer, I can always rent an Airbnb close to my home. But I can rent this spot out for the other 10 months, make money, use it personally. And then when I'm over 59 and a half, if it's owned in a Roth, I can just move into it tax free, or just continue doing this. Get the income from the asset, right? The Airbnb, the rental income will go back to my IRA without tax. I'll be able to enjoy it for up to 60 days a year, right? Because as long as you take that in kind asset, right? So basically, I'm taking it for 60 days and I can return it within 60 days. Publication 590, the IRS publication on IRAs, is clear. You can do cash or assets. You're not stuck just doing cash, right? So if you take cash out, within 60 days, you have to put the cash back. If you take real estate out, within 60 days, you have to put that real estate back. You can't mix and match. And some folks get in trouble is they pull some cash out and buy a house, and then they're like, oh no, I got to now get the cash back in with 60 days. And they call us up and they're like, I have a house. Can I just put the house back in my IRA? Unfortunately, the rules say no. So in this case, it's perfect because I'm actually just taking an in-kind distribution of the property. I don't have to quit claim it or anything. Just using it for 2 months, 60 days. And then I stop using it, right? It goes back into my IRA, fill out the paperwork, to let the custodian know that I've returned that asset. And that's it. I've used the rules now to personally benefit myself without creating a taxable distribution. Now, so long as you stay within the 60 days, it's tax-free, penalty-free. Do it every 12 months. That's it. Publication 590 is super clear. You can't do it for each IRA. So this is encompassing all your IRAs. So once you do the 60-day rollover once, you're stuck for the 12 months. You can't do it again. But if you are, again, using it as a summer home or a winter home, or to go skiing, or a fishing home, or whatever it is, you have up to 60 days a year to do this. So obviously, if it's a summer home, you're probably going to want to do those 60 days consecutively. So whether it's like June and July, or mid-June, mid-July, whatever it is, you have basically 2 months to use the asset for any purpose. So I just think it's a brilliant idea. I can't believe I never thought about it before. Like, I'm totally doing it for the home I'm looking at. And it's going to be perfect for my family because we'll use it in the summer for 2 months. The rest of the year I'll rent it out. Like, I don't care to use it. I can't, and I don't want to. Um, it's going to be perfect. So what do you technically need to do procedurally? Just work with your custodian. You just let your custodian know you're going to do an in-kind distribution of that asset, and then literally the paperwork needs to be complete because it's not like cash, right? You can't wire an asset back, right? You can't like move the property back into the IRA. It's just about working with the custodian and letting them know that within that 60-day period, the asset has been returned. You basically are depositing that in-kind asset back. So with real estate, it's paperwork. With cash, you actually have to show the movement of the cash, whether it's by check, by wire, whatever it is, but you have to actually show the movement of that asset. With real estate, or a different type of in-kind asset, it would actually just be paperwork. Real estate and cash is probably the only utility. I mean, maybe if you have like a car or something in your IRA, but cryptos, I really can't see the value of kind of using it, personally for 60 days. I guess if you need it for like a trade, stocks also doesn't really work very well for stocks. It's mostly cash. If you take cash, put the cash back in, and obviously real estate, whatever you take, you got to put back in. So the rules are crystal clear that you can do this. I'm not sure. I assume I'm not the first to think about it, but I haven't seen it out there. I haven't ever seen anyone talk about it, whether it's a blog, podcast, video. And this just came to me by chance because I was thinking about it and talking to my wife about how we can basically use the property. I wanted to use or purchase with my IRA, and how I can use it personally. Because ultimately all I need is like 45, 50 days. I don't really need more. I just need like June and pretty much July and August, a little bit of August. So like 45 to 60 days is going to be amazing. And it's all tax free. And then the rest of the year, the money from third party rent will go back to my IRA that owns the asset tax free. So I just thought it was amazing. It's a great way to use the asset to generate tax deferred, tax free income. At the same time, I can personally use it. Um, the debt shouldn't matter. You're still paying off the debt. So someone asks, how would that work if you have debt on the property? Shouldn't matter. I mean, you just pay off the note. The question is who pays off that mortgage during that time? It's a good question. Again, I haven't seen any IRS guidance on that particular position. Um, I don't know. It's a great question, James. During that 60-day period, who's paying off the mortgage? Are you, since you are using it personally, or is the IRA? I don't know. I think the arguments for both. You can say that your intention is to have the asset returned to the IRA. It's just a 60-day rollover, so the IRA will continue paying the mortgage. And if you do miss the 60 days, then it's your asset. So I think the IRA will continue paying it because technically within that 60-day period, it's still you own it, but it's still technically part of the IRA since you haven't breached the 60 days. It's technically not a taxable distribution. But um, it's a great question. So for the solo 401k, it's the same idea. The problem is with a solo K is under 59 and a half, you can't do an in-kind distribution. Okay. The difference between an IRA and a 401k is under the IRA rules, there's no triggering event. So if you're under 59 and a half and you want to do a 60-day, you can do it. In a 401k, technically, if you don't have a hardship, you can't get access to your 401k funds if you're under 59 and a half. So it's probably not going to work very well, Ray, if you're under 59 and a half and have a solo K, because you're not going to get access to that property. If you're over 59 and a half, you would technically be able to do the 60-day on it, but it's a lot cleaner in an IRA because the trigger and event rules that apply to 401ks do not apply to IRA. So great question. I should have mentioned that earlier, but it works a lot cleaner with IRA since there's no limitations on when you can do it in kind. Now, um, I just think it's super cool that this is really the only way that you can use the asset without taking a formal distribution. And 60 days for a lot of people would be enough. Now, clearly, if you live in Ohio or Michigan, you may want more than 2 months a year in Florida to get out of the cold. But let's say you can use your property for 2 months, and then maybe you rent an apartment or Airbnb it for another 4 to 5 weeks. This way, at least you get the use of the property. It saves you some money, and then you can keep renting it out the rest of the year, so that you can still generate revenue for your IRA. So I'll let you know how it goes. I'm going to do it. I might get leverage on it. I think I got enough cash to get this home. Working out a deal with the owner right now, but it's a really good question in terms of the leverage on that asset. What happens? Because technically, it's still an IRA within that 60-day period, even though you're using it. It's still technically in the IRA. It's only once you pass that 60-day that the asset no longer becomes an IRA. But remember, for cash, the consequences are grave. It's taxing the 10% penalty if you're under 59 and a half for missing the 60-day. Same with the real estate. It's the value of that real estate if you screw up. Real estate's going to be easier to fix because it's just paperwork to work with the custodian to make sure they understand that the IRA, takes possession of that asset within the 60-day period. So I think if you're doing this, you want to communicate with your custodian, make sure they understand the rules. Some may not. We will, trust me, because I'm going to do this myself. So if you're interested in doing this, talk to us. We'll help you with it. But cash, you have proof, obviously, of a check deposit in the mail or a wire shows that it was received within the 60-day period. Not a big deal. For property or in-kind assets, I do believe you're going to want to work closely with the custodian to make sure everyone is on the same page and there's no improper 1099-R filings claiming a taxable distribution down the road of the 60-day rule. So some big picture things to keep in mind. Once every 12 months for all your IRAs. If you have 10 IRAs at 10 different institutions, you can only do this once every 12 months. What else would I say? If you take cash out, put cash back in. Um, and if you screw up and miss the 60-day deadline, the asset becomes subject to tax. And if you're under 59 and a half, 10% penalty. So long as, so Isaac asks, so as long as you stay within 60 days, yes, it's not prohibited. It's, you're allowed by law every 12 months to use an IRA asset up to 60 days for any purpose. Whether you go on vacation, whether you buy yourself a watch, whether you pay a medical bill, credit card deal, pay for your kid's wedding, whatever it is, you can do whatever you want with that cash for 60 days, not 61 days, 60 days. And as long as you return that asset within 60 days, it's tax free, penalty free. Next question. I assume you could still rent out the property during the 6-day period if you chose not to. Yeah, of course. Like I own other real estate. I don't do this for that, just because I don't want to live in the homes I own as a rental property. So yeah, I rent them out 12 months a year. You don't have to do a 60-day. A lot of people never do it. I've actually never done a 60-day. I'm just thinking of doing this, and this idea just kind of popped in my head because I was like, I don't want to own this. I don't want to use this property for more than like 40 days. So do I want to buy it? Maybe I'll just Airbnb. But then I started thinking, it's like, oh, the 60-day rule. Perfect. I'm going to buy this asset, rent it out, Airbnb it, whatever. And then up to 60 days, I'll use it and I'll treat it as part of the in-kind distribution 60-day asset. I'll deposit it back to the IRA within the 60 days. And I'm going to keep doing this every year until it's 59 and a half because I own this asset in a Roth. And then I can decide what to do. I can just quick claim it to myself after 59 and a half, since the Roth's going to be open 5 years, and then use it for any purpose. It's going to be mine. Or I can just keep doing it, maybe till I'm 70 or 80, or either sell it or, just end up taking it as a personal distribution at that point, tax free. So a lot of really cool options. Just a fun strategy. Everyone's always trying to find an angle like, hey, how can I use an asset for personal purposes without triggering a taxable distribution? And honestly, this is the best way I've come up with. The Roth moving in at 59 and a half is great too. But, not everyone wants to wait till they're 59 and a half to use the asset. This way you can do it when you're 22, 52, 42, 32. The only issue is you only have 60 days, right? So if it's Florida and you really need the 4 months because you hate the cold, then this will give you the 2 months, and then you can find another option for the other 2 months. So just wanted to share this with you. I'm going to do it. I'll kind of let you know how it goes. Yeah, I do think it's brilliant. I can't believe I haven't thought about this before, since literally all I do is think about ways to game the system. As a tax lawyer, that's kind of why I chose tax law over any other area of laws. I just find it as a puzzle. You look at the tax code, you look at the rules and regulations, and you find out how you can use the code to benefit yourself. And the IRA rules, there are a lot of flexibility. The prohibited transaction rules, are broad, but there are limitations like siblings, aunts, uncles, cousins, stepkids are not disqualified people. There are ways to kind of do stuff if you need to get it done, but this is a way you can actually use it yourself. You're just capped at the 60-day, which for me isn't a big deal because I really don't want to use this property more than 60 days. So if you're using, just looking for a summer home, a ski home, maybe a fishing home, lake home, and you're really 60 days is all you need, and you're willing to rent it out for the other 10 months, like bang, this is an unbelievable strategy. So this is another reason to watch. Welcome to the club. Like if you didn't know I was going live, if you're not subscribed to this channel, you just may miss this. So I can't promise I'm going to come up with more brilliant ideas. According to my wife, I don't know anything except IRAs, so I'm just going to focus on what I know best, and that's helping people take advantage of the self-directed IRA rules and maximize their investment returns by diversifying and investing in assets you guys know and trust. So that's it. Thank you guys for spending some time here today. Happy trails, happy investing. Hopefully you can use this strategy, come up with something cool. And if not, well, you're hopefully smarter for it. That's it. One more question. So no issue with iOS. I've heard that it could not be done. No, it's the 60-day rules are clear under publication 590. You can use the asset for any purpose, whether it's cash or any asset, right? If you take cash and go buy yourself a car, You just got to return the cash within 60 days. If you take a property, publication 590 is clear. It says cash or asset. So there's nothing in case law or anything that would say otherwise. So the key is just staying within that 60 days and making sure that asset goes back to the IRA, and obviously working with a custodian that would know how to report this and understands the rules. So appreciate you guys spending some time today. Hope you guys enjoyed today's video. I did. Thought this was fun. Just wanted to share the strategy with you. And have an amazing day. And ciao. Take care.